Hey there, my name is John Stevenson. Welcome to the Guaranteed Retirement Guy Show. Today we're going to be answering the question, if I hand over $200,000 to an insurance company, how much money will they actually pay me per month? How much lifetime income can I stand to get? So we're going to be looking at a lot of companies. Okay. I represent over 70 carriers. I work with thousands of different products and variations. And when it comes to lifetime income, it's really, really important to see everything that's on the table. So a lot of times people are pitched maybe 1, 2, or 3 options from their advisor. And then they start looking around and they realize there's a lot more out there. And if you go to my website, johnstevenson.com, you will actually see all of those options available. If you check the SPIAs or the DIAs or the QLACs or the income riders, which they typically pay the most if you're looking for highest annual income, then you'll find out there's a lot of options available. And if you're looking for a single payout or a joint payout, those payouts are a little different, and we're going to explore those together. Okay, so I'm going to show my screen and we're going to just look at 200,000. Obviously, you might want to put in a lot more for yourself, maybe less. But just depending on your situation, this will at least give you a baseline on what to expect from $200,000. All right, so let's dive in. So we're looking at someone in Vermont. This is a single payout. We'll look at a joint here in just a second, but it's for $200,000. And I'm going to start them. They're 54 years old, but I'm going to say they're going to start income at 62. So they're going to defer it 8 years. Obviously, if they take it sooner, it will be less. But just keep in mind with any annuity, even if it's an IRA or non-qualified funds, the fact that it is in an annuity contract, which gives you tax deferred growth, then because it's inside that bucket, you have to wait till 59 and a half to take income. Otherwise, you will incur a 10% tax penalty. Unless you buy a SPIA or a DIA, then typically those will bypass that rule because those are fully annuitized. They give you periodic lifetime payments, just like an income rider, but they're less. And because they're fully annuitized, they're irrevocable. That's where the IRS kind of gives you a break on those. So, but that's the trade-off. You typically will get less income on those, and they're no cash value and fully annuitized. So, and I'll show those next, but I just wanted to point that out. All right, so someone who is starting at age 62, they've got $200,000. Here are all the options available. Okay. And there's a lot of them. And so let me just clean this up. I'm going to just say top annuity per carrier. And you'll notice that there are some accelerated payouts here. So if you go to my website, you go to the income rider, which is what we're looking at, you'll notice a lot of those will pop up on the top and they'll give you these. You'll notice there's a huge gap between those and the other ones that are very closer together as far as income. And that's just because they're accelerated payouts. This means that the income is temporary. Okay, so let's dive in. I'm going to show you my screen and we'll look at these. All right, so NASA, if we pull them up, and this is just one of their options, okay? They have other options that pay more, but for a less amount of time. So for this one, they're giving you $29,000 a year, and that is, looks like, what, 1, 2, 3, 4, 5, 6, 7, 8 years, and then they drop it pretty drastically after that. To $18,000 a year. This is for the go-go years. People will buy this because they want a vacation or they want to just spend more money, or maybe they want to just retire early and maybe delay taking Social Security. Maybe they'll wait till 70 to do it. This would be a good option for that. Another option that Nassau gives you is if you only take income for 5 years, they'll actually accelerate even more income, much more than the $29,000. So I want to say it's another like $300 to $500 a month. It just depends. So if you play around with my calculator, you will see these accelerated options. But you just have to be okay with a huge drop. And with the higher the income, the larger the drop in income later for these accelerated options. All right, so I'm going to go in here and say no income reduction because most people who contact me, they are looking for highest lifetime income from an annuity that never reduces. Okay, so we'll look at this. All right, so $28,000 for a single payout is Midland. Midland is the highest. Then you can see North American, you can see ClearSpring, EquiTrust, Nationwide. One thing to note on Midland is if, let's say this person is 54 when they're buying this, but let's say their 55th birthday is in 2 weeks. Okay, and I have a lot of these people will reach out to me right before their birthday and they're like, hey, I want to buy a Midland policy because they count anniversaries as birthdays instead of years. So when we're looking at 8 years, all of these other annuities defer out 8 years. Okay, 8 contract years. You buy it, it's 8 years. If you're 54 and 9 months, okay, then you're planning on taking this actually at 62 and 9 months. Okay, so you got to think about that. So if you're thinking, wow, right, I want to take it right when I turn 62, then you're gonna have to wait a little bit, right, to get the illustrated income that we're looking at. So with Midland, though, they're saying it's 8 birthdays, right? So that's really nice. So if you're 54 and 9 months, then in a few months you're going to turn 55, right? That's your first anniversary with Midland. So really, you're taking income in 8 birthdays, but really it's like 7 years and 3 months. Kind of nice. So that is, and it's based off of the youngest annuitant. So if it's a joint, then it'll be based off of the youngest annuitant's birthday. So if we look at this one, and I'll show joint here in just a second. I just kind of wanted a disclaimer on just the different types of annuities here. Okay, so with Midland, they are, let's see, they're giving you a 14% withdrawal rate multiplied by 200,000, giving you 28,000 a year. Okay, if you take it earlier, you certainly can. You could take it in 7 birthdays, that's 25,000, or in 6 birthdays, that's 23,000. Okay, now let's go back up and we'll just say that this is a joint. Okay, so for joint, and I'll just keep the spouse the same age, then the income is 25,360 with Midland, and then North American's poking its head above there as well. Now just keep in mind, if your birthday just happened, then North American probably be the best because it won't matter anyways, and their income's a little bit higher. So and their income's higher for a joint. So it just depends on the company. Certain companies have better withdrawal rates for joint versus single, and some more for single versus joint, which you're seeing here with Midland. But it's not a huge difference. I mean, you can see with Midland, let's see, with their illustration, we're looking at a joint payout of 12.68%. So that's a 12.68% versus a 14%. So, and you'll notice that they're charging you rider charges. See here? See the rider charges here? That comes out of the account balance, not the income. And that pays for the lifetime income. That gives you the rider that gives you that either joint or single lifetime income. And the nice thing about these, you don't have to choose whether it's a single or a joint until you actually activate income. So a lot happens in 7-8 years. You could get divorced. Your spouse might pass away. And because of that, you can go and you can call a company and say, hey, I want to take a single payout. And obviously a single payout is going to be 14%. Maybe something happened to your spouse, or maybe you got divorced. That is nice to be able to have that option. So, and a lot of annuities are like that. They'll give you single payouts and joint payouts. So we're talking withdrawal rates. So you'll see the withdrawal rates here. This is showing single payout rates. And when you get the contract, you'll see a whole page all the way down, and it'll show you, because they don't know when you're going to take income. You might have a plan to take income in 7 years, but you might decide to take it in 5 years, or maybe you'll take it in 10 years. It's nice to be able to just know that you'll either have, if you want to wait longer, you're going to get more income. If you wait less, it'll be less income, but it'll still be earlier income. And these are very flexible. That allows you to do that. Okay. So let's go into, I'm just going to show you North American here real quick, just to kind of show you a little bit of the difference here. So North American, let's say you just had your birthday. So we're not really looking for an edge on birthdays, right? The anniversary is going to be, in 2 weeks when the policy issues. And so it's pretty much the same as Midland at this point because you just had your birthday. And let's say you're the youngest spouse. Okay. Just make that easy. So if we look at that and say, okay, well, North American does it a little differently. See the withdrawal rate? It's not like 12% for a joint, right? It's 6.9. So what they're doing is they're doing a combination of two. They're bringing your benefit base up because if you remember with Midland, it only was at 200,000. Like it never changed. See, 200,000 never changes, right? But with most of the other carriers, they will grow the benefit base and a lifetime withdrawal rate. And so the lifetime withdrawal rate, of course, is not 12%. It's 6.9 multiplied by 370,000. And that's because that benefit base is growing guaranteed. And I'll just show you the rate here. It's growing at 8% compounded every year. So that's what the income rider is paying for this one. And most annuities are like this. The income rider, and you see the charge here, it's a little bit higher than Midland because it's based off of the benefit base, not the account value. And because the benefit base for Midland never changes, the rider charge never changes. So see the difference on that? So that's what's nice about just seeing the differences on these is maybe you want low fees. Okay, low fees, Midland's pretty low fees, but you got to make sure they're the highest income. I mean, in your case, they might not be the best option for you. That's why you have to look around. Check out my annuity calculators on johnstevenson.com and you will see here's the annuities that are available. Here's what they pay out. Okay. All right. So now I'm going to go in here and I'm going to say, well, I don't really want to retire at 62. I'm going to take my Medicare at 65. Okay. Well, we'll say 65. So, and again, I'm just looking at joint. Okay. So Clear Spring's popping it up just a little bit higher than Midland, not much higher, but still higher, $1,000 more. And so with this, if you're looking at that, it's a great option. Maybe you just had your birthday, and so Midland is out of the question. If you have your birthday in 3 months or 3 days or 3 weeks, hopefully weeks, because 3 days you probably won't be able to buy it in time. But 2-3 weeks you will. But if you have a birthday that early, then and Midland is that close, okay, just going back to these, if it's that close to the income, it might make sense. Okay. Because you can look at this and say, well, yeah, it's $1,000 more a month, but I could take 31 grand, right from the beginning. So $1,000 more per year, excuse me. So $31,000 per year versus $32,000. Yes, you're getting $1,000 more with Clear Spring, but with Midland, well, your break-even point is going to be what? 30 years? Okay, that's probably worth it. So just depends on what you're looking for. Again, when you're watching this video, Midland might not be the highest. Okay, it might be Athene, or it might be North American, it might be Corebridge. It just depends on your state, it depends on your age. Everything depends. And so that's why I just tell people, go to my calculators and see for yourself, see what the highest payouts are. And these are always fluctuating. Like these companies are always trying to fight for first place. Okay, Midland sometimes is on top, and sometimes they're like 5th or even 10th, right? Sometimes Nationwide is on top. It just depends on your given situation. That's why I hate it when advisors are trying to push a product and it's just the same product to every client. And it's horrible because you got to show them everything. You got to show them everything from every company, or at least use something like this where you can show someone and filter it out, where you can see, hey, yeah, I could sell you this one down here, but the payout's not as high, right? My commissions might be higher, but the payout to you is not as high. So anyways, but again, going to Clear Spring, let me just see if I had that one up. Okay, Clear Spring, same thing. Benefit base grows to $503,000, multiply by 6.4, give you $32,000. You notice on this one, they don't actually allow you to take income until you are 60, right? So it's a little different. They're a little different than some other carriers. The rider charges, though, they're pretty cheap. They're not bad. That's pretty good. That's pretty comparable to Midland. So actually a little bit less. So that's not bad. Then you look at, here's what it looks like. If there's index growth, then your account value lasts a little bit longer. But again, the rider, which is what you're paying for, the benefit base, this is still exactly the same. It's guaranteed, which is why you bought it. Okay. $503,000 multiplied by 6.4, giving you $32,000 a year. So, and that's guaranteed for your life and your spouse's life. Even if you pass away and there's nothing left in here, your spouse will continue to get this for the rest of their life. So it's pretty nice. Anyways, I hope this helps. Let me go into one more example. And, I try to keep these videos short, but I just want to show you a SPIA. So this is in 11 years, or in Midland's case, 11 birthdays, right? So, but if I'm going to go in here and say 11 years, how would a SPIA or a DIA? SPIA and DIAs are the same. SPIA is single premium immediate annuity. DIA is just the same one, but it's deferred. Okay. So I'll say I want to do joint life, make sure the cash refund if someone dies or if both die. And then I'll say 20. Okay. So look at that. All right. $2,200, 2227 New York Life, and then Integrity Life, then Mass Mutual. So what is that? That is 2227 times 12. $26,000, $724 per year. Pretty good. That's joint income. But it's fully annuitized. You can't take your money back and you cannot change the date. Sometimes you can change the date a little bit, but most of the time you got to keep it exactly where it is. Okay. It's very rigid. So $26,724 joint income versus 32 grand. Well, you be the judge. That's why I like income riders. I mean, I know they got fees, but if you're looking for highest annual income, I like them that way. So anyways, hope this helps. this video is really just meant to give you as much information as possible about what a $200,000 annuity would give you, but also just kind of give you a well-rounded approach to here's what annuities do, here's the ones you should be looking at, and it all depends on your goals and what you're looking for. So I like to show everything, and of course I sell annuities. That's how I make my money. But I always tell people, go to my website, check out the calculators, and then if you feel comfortable, reach out to me. Okay, there is a link on my website. We'll get on a Zoom call, and I'd love to help you purchase an annuity if that's what you're looking for. There's a link below this video as well. You're certainly welcome to use that. But again, no pressure. There is no pressure for me. I just want you to see, here it is. Here are the contracts available, and watch my other videos, kind of get educated and see what is out there. And then when you feel comfortable, then reach out. No one likes to be sold. I hate being sold. And so I hate being product pushed. A lot of advisors will always try to shove something down your throat because they're desperate to make a commission. That's just not the way I work. So anyways, hopefully you feel that sincerity, and hopefully this video was helpful. If you like the video, make sure you like, subscribe, share, comment below. I'll answer your questions, and we'll see you next time.